A very good afternoon. Asian stocks traded mixed ahead of the eagerly awaited Jackson Hole Symposium taking place in the United States, which investors are hoping will clarify central bankers' position on monetary policy. The Nikkei share average rose marginally, up 0.05%. The Hang Seng Index rose by 0.93%, while the Shanghai Composite Index advanced by 1.45%. US stocks fell again on Thursday, with the S&P 500 posting its fifth consecutive loss on the day. This happens as all eyes now focus on proceedings at the Jackson Hole Symposium, with Fed Chair Jerome Powell expected to speak today. In company news, the retailer share Walmart was a drag on the market as it slid by more than 4% despite lifting its full-year sales and profit guidance after their quarterly earnings missed forecasts for the first time since 2022. The Dow Jones Industrial Average declined by 0.34%. The S&P 500 lost 0.4%. While the Nasdaq Composite Index fell by 0.34%. Looking at local indicators, we see that the all-share index is currently trading up 0.4% at 102,132 index points. The rand is trading at 17.64 against the US dollar, 20.46 vis-a-vis the euro, and 23.66 against the British pound. On the commodity front, we see that gold is trading at $3,330 an ounce, platinum at $1,330 an ounce, while Brent crude oil is trading at $67.45 a barrel. All right, we get into conversation now with Patrick Matidi. He's the head of multi-asset strategies at Aluwani Capital. Thank you so much, Patrick, for joining us. So it's been a sort of slow week, very sort of risk-off in nature for the most part. But what are your reflections on what's been moving the markets? And presumably the focus today and over the weekend will be what's happening in terms of that central bankers meeting at the Jackson Hole Symposium.
Yeah, good afternoon, and thanks for having me. Indeed, it has been a fairly quiet week, both domestically and globally. A few company-specific results that have come through, but as you mentioned, the focus now is on the U.S. Fed as they meet with the other central bankers, this weekend. And there, the expectation is for some clarity as to the path of interest rates going forward. So we have seen, if you look at it from the start of the year, massive expectations in terms of U.S. cutting rates, which then leads the other central bankers across the world. But then we had tariffs, which then created a lot of uncertainty with regards to the impact on the economy. And so the Fed has kind of been, stopping and starting in terms of their intentions on rate cuts. So we've had now the tariffs almost behind us, where there has been some settlement in terms of the U.S. and some of the trade partners. Now we kind of need to see what the impact is on the underlying economies and therefore the implications for interest rates going forward. Yeah. And hopefully the Fed will give us some idea as to how they see things.
So how are you seeing the commodity space in terms of gold and oil right now? I mean, given the geopolitical and trade uncertainties?
Yeah, so gold remains, fairly much in the pole position, strongly supported by, as you say, the geopolitics, the uncertainty, but also, there is a lot of central bank buying, where a lot of the non-US central bankers are trying to diversify their forex reserves away from the US dollar, where we have seen the US dollar being under quite a bit of pressure of late. So that support continues to be in play. On the oil side, it comes and goes, depending on what's happening in the Middle East, but also fundamentally, the oil inventories are actually quite low, which then also supports, the price for oil going forward. On the other hand, so you still have quite a lot of supply. So if you look at OPEC and their intentions, that there's still a lot of capacity to can produce a lot of oil into that demand, and hence the up and down that you're seeing on the oil prices, on a fairly regular basis.
Yeah. So Goldfields, they released their half-year earnings, reporting that their profit had jumped to around $1 billion US. That's up from less than $400 million in the year before, and they're giving shareholders an interim dividend of 7 Rand a share, which is not too shabby. This is clearly not a bad time to be holding gold stocks, but for how much longer do you think this momentum can continue?
Yeah, so with regards to Goldfields specifically, yes, if you look at the gold price over the last 12, 18 months, it has been very, very strong. So one would expect, that the results will also come through fairly strong, supported by a higher gold price. But also they've managed to increase production during this time, which is also a good thing from an operations point of view. And hence then being comfortable to can give back, excess capital to shareholders in the form of dividend. As to how long it will last, I think a lot of it depends on the gold price itself. As I've said earlier, we're still seeing a lot of support for the gold price for as long as there's a lot of uncertainty, be it from the geopolitics, be it from I guess the tariffs that are tapering off. We do still see the gold price being strong. Again, supported by central bank buying, which I think there's a lot of scope to can still buy more, given that they need to diversify away from the US dollar.
Yeah, before we run out of time, I see that the pharmaceutical share, Aspen, it dropped by about 10% today. They came out with a trading statement for their annual earnings for the end of June, showing the market that their headline earnings per share are likely to come down by between 40 and 45%. Your quick comments on how they're doing. It hasn't been a great year for them.
No, it hasn't. So the story started in April, where they shocked the market by announcing contract cancellations, to the tune of about $2 billion, which is quite a big number in their lives. So since then, there has not been further clarity in terms of resolution of those disputes, and hence them guiding still for lower earnings going forward. So it has to do literally with the core of their business that is under pressure, and hence this dip in earnings expectations.
All right, Patrick, thank you so much for your time. Have a great weekend. That was Patrick Matidi. He's the head of multi-asset strategies at Aluwani Capital.